reality is that all of these positive news that have come in haven't really moved the way capital has been deployed. And so the question really is, at what point is capital being redeployed into crypto? And when it takes place, how is it going to be redeployed? I think the previous sort of bull market where all the boats are being lifted by the capital that's flowing in, I think that era is over. I think we're now in a market where it's going to be a lot more about picking the winners and where there's going to be more dispersion between different tokens and between different chains, where there's really momentum that is taking place in terms of adoption, in terms of infrastructure that is being deployed and used within the existing financial markets. And therefore, it's really about staying on top of those trends, understanding on what chains is infrastructure being built, what chains have TVL that is growing in terms of financial assets that are being tokenized. And then from there, how does that impact the demand for the underlying token itself? And so I think it's really going into to be a token picking era or years ahead of us, where there's going to be a lot more divergence and winners and losers of tokens that are going to disperse a lot more than what you've seen in the past, where just all the tokens would go up at the same time.
Okay, so this is Joseph Shalom. He is the Xrpl CEO. And this coexists with the previous video breakdown that I played for you guys a second ago from the individual representative from STS Digital, going on to talk about that we're about to enter into an environment where we're going to have winners and losers, which also coexists with what this gentleman here from Zero Hash said about the conversation shifting from an institutional standpoint. Institutions that were previously sidelined are now in bed with Zero Hash doing proof of concepts and testing out infrastructure and blockchain technology. And this gentleman here, Joseph Shalom, in a recent Coinage podcast, mentions that we are on the precipice of entering into a institutional super cycle. Take a second and listen. It's a very short video clip.
Because we're at the beginning of an institutional super cycle.
A very quick clip. And that coexists with everything that Metallicus has been working on over the past consecutive couple of months, going through the 2026 Q2 quarterly report from Metallicus. I want to first read the opening statement from Marshall Hayner, and then pick apart something that was mentioned in this report here in this area about the MetalX app, loan protocol, and how it coexists with everything that's been recently said from individual representatives from Metallicus like Frank Mazza, recent partnership announcements from BitGo and Investify, and some information that was put out from some other Metallicus community members over on Twitter. All right. So first, Q2 2026, which obviously, of course, just recently ended, only about a week and a half ago, was a quarter of expansion and alignment across Metallicus. We continued building the digital asset banking infrastructure we believe regulated institutions will need, while also broadening the number of ways that the ecosystem can reach the market. More specifically, we are increasingly focused on how our technology stack can help banks and credit unions improve deposit retention by giving them modern wallets, payments, stablecoins, and digital asset capabilities without pushing customer relationships outside the institution. The clearest company-level example in Q2 was the launch of the Innovation Program 2.0 with Cross-State Credit Union Association, beginning with an initial cohort of 50 different credit unions exploring stablecoins, digital identity, blockchain infrastructure, and faster payments. At the product level, we made meaningful progress on the systems that support long-term deployment. MetalPay enterprise integration work moved into clear execution phases. This is important right here. So I'm going to re-highlight that, okay? Considering something that I'm going to play for you guys in a second. It says MetalPay enterprise integration work moved into clear execution phases. Passkeys improved account access, and WebAuths advanced into a more polished multi-network wallet experience with its first major Connect UI UX refresh in nearly 5 years. Across the broader stack, Metal Blockchain continues strengthening its validator footprint and Pulse VM roadmap. Metal Layer 2 established a clear, long-term direction through the Homecoming proposal, and Metal Dollar moved closer to broader distribution with governance approval for Ethereum's expansion and Q3 launch preparation. Q2 also reinforced that our strategy is not limited to shipping isolated features. Loan Protocol crossed $500 million total lent demonstrating real utility across our DeFi infrastructure. Metal dollar governance widened to consider additional baskets assets such as MGUSD, FID, RLUSD, and SoFi ID, supporting our view that the digital dollar market is becoming more fragmented and more important. At the same time, we believe Metallicus is well positioned to help simplify that fragmentation across wallets, payments, stablecoins, and on-chain financial products. Q2 also brought a stronger external signal for XPR network. During the quarter, XPR landed in the top 40 blockchains by DeFi TVL, and at one point overtook the Xrpl in the rankings. That kind of visibility matters because it reinforces that the ecosystem is not only shipping infrastructure, but also sustaining measurable on-chain relevance. And if we go back and we remember what this guy said here, he said that we're about to enter into an era of finance where on-chain metrics, TVL, tokenization of real-world assets on specific chains actually matters. And that's who's going to win. And so to see in real time the XPR network engulf the XRP ledger in terms of DeFi TVL just in this last quarter alone was a huge milestone, considering that the vast majority of the XRP army still thinks that XPR is a scam version of the XRPL, right? So I thought that that was interesting that they called that out in their Q2 report. Now, if we come down here, it says Metalix is at the front end, Metalix is the front end experience, but Loan Protocol is one of the clearest signs that broader ecosystem is supporting meaningful on-chain lending activity. Crossing the $500 million threshold strengthens the case that the lending stack is maturing into a durable infrastructure rather than remaining an experimental feature set. This is important because of something that Frank Mazda just recently said on an interview from the FinTech Combine just 5 days ago, where he said that these credit unions can integrate WebAuth and MetalPay into their banking infrastructure. Take a second and listen.
Understand what it is, and I think just the thing to know, like, you have your industry experts in the organizations and the credit unions that are pretty well versed, but where it becomes a challenge is that you can have a CTO or a CIO or even your chief digital officer, which typically are the ones that know a lot more in this space and are comfortable and are using technologies. But because they know it doesn't mean that the board is ready to make that jump. So being able to make sure that they're getting the education is really important in this process, and really being able to explain how it works. And what's really great about Metallicus is we give them a tool that they can actually use. Say, hey, you know what? You don't understand it yet? Cool. Download MetalPay. Go use the MetalPay app. Make some transactions. Understand what the flow looks like. Guess what? You don't want to use your own real demo like this? We give you access to the sandbox, the pilot, where we give you access to our WebAuth wallet that has a sandbox environment that you can test stablecoins, you can test other forms of digital assets. So this is the really cool thing, is that we give the credit union every opportunity to really be able to learn, and then not just educate the credit, but everyone below that as well as their members.
So the reason why that's so important is because here it mentions that this lending stack is maturing into a durable infrastructure rather than remaining experimental. Okay. So for context, before I play a video clip from this individual representative from BitGo, who is the COO of BitGo, if we go back and we remember what took place February 11th, 2026, BitGo Banking and Trusts and Investify partnered to expand nationwide digital asset investing for banks and credit unions. And without reading the entirety of this report, we know now that Investify can offer certain secure digital asset solutions to their partners of banks and credit unions across all 50 states. And if you go on Investify's website, we remember that Metal blockchain is one of those digital assets that they're willing to offer to their clients. Now, without going over to the website, just taking it directly from a Investify representative, shout out to XPROG for this. We remember back just a couple of months ago, January 13, 2026, we have this gentleman here from Investify saying that they're willing to offer credit unions access to Metallicus's token if they want to turn them on. Take a second and listen.
Using stablecoins just like we see cashback on cards today, right? But when that happens, we're already going to be there to support it. With our partnerships that we have in place, We're multi-custodial now too as well. We have our primary custodian is BitGo, the second largest crypto custodian in the world, only behind Coinbase. And the big difference between BitGo and Coinbase is BitGo does not compete direct to consumer. So BitGo is only B2B, right? Coinbase is eating credit unions' deposits for lunch. And so we want to work with partners that can enable credit unions and not compete with credit unions. And the great thing about BitGo and their scale is they're able to turn on new coins as they come into the ecosystem. And so we just announced yesterday a partnership with Metallicus. And so we're not out there pushing Metallicus' coin for them, but if credit unions want to use it, we're happy to support it because we can do so turnkey, very seamlessly, where credit unions doing implementation with us can just tell us what coins they want to turn on. So they can turn on USDC, USDT, Bitcoin, Ethereum, and then if they want to turn on Metallicus' coin, they can. And so we're just here to prepare credit unions.
And so I thought that was fitting, considering what they just released in their document, where it mentions that they have been building durable infrastructure rather than remaining in experimental features. And listen to what the BitGo COO just recently said. Take a second here and listen to this lady, Jody M. I don't see her last name all the way on the last part of the screen, but her first name's Jody.
Prototype environment, and now they're moving fold. First, it's scale, right? A lot of these institutions are operating in a test or a prototype environment, and now they're moving into full scale. They don't realize the operational uplift that scale a test or a prototype environment, and now they're moving into full scale. They don't realize the operational uplift that comes with that. And then second, I think it is operationalizing risk management. When you're holding a large amount of cash or cryptocurrency, you have certain risk parameters that you need to do, particularly for capital. A lot of licensing, as you were talking about. It's super important that people really understand those complexities and that they're going to likely need to hire people to help service these type of risk operations.
So I just found it interesting. This event was posted from BitGo just one day ago, 24 views, custody compliance and scale, Jody Metler. And she mentions that institutions are finally starting to step into this phase of getting out of the test environment and starting to really embed digital assets into their infrastructure, rolling into this implementation phase. And that coexists with what Metallicus just recently said in their Q2 report. They're building infrastructure rather than just remaining in this experimental feature. We heard the gentleman from Investify mention their partnership with BitGo and how they can offer Metallicus' tokens once institutions and credit unions are ready to turn the coins on. And we saw the announcement from BitGo at the beginning of this year. So all of this stuff is building up. So even though we've seen a sell-off in digital asset prices, I see what's being said on the internet right now from these major systemically important organizations in crypto, BitGo being one of the largest custody providers and asset managers in all of crypto, right? She's sitting here saying, like, look, we're about to head into this or exit out of this experimental test environment into this real implementation phase, all right? And then we come over here to shout out to XPROG. I had to go back into my DMs here in Twitter to find that message that he sent me. And then this coexists with something as well from Metallicus that he just posted July 8th, 2026. Reading this, it says, exciting news for credit unions. Payfinia, hopefully I'm saying that correctly, has been selected for the Circuit Accelerator program, teaming up with 80 plus credit unions representing $382 billion in assets to pioneer next-gen embedded instant payments and agentic services. Payfinia's Instant Payment Exchange IPX platform, certified on RTP and FedNow, delivers open APIs for seamless real-time money movement that embeds directly into digital banking and fintech apps. No core disruption needed. Think instant A2A transfers, QR payments, digital wallets, and more, all built for credit unions. Now adding blockchain power via Metallicus and their partnership, as Keith Riddle, the general manager of Payfinia Credit Union Service Organization, said. We look forward to collaborating with the Banking Innovation Program participants to accelerate additional use cases that would be enabled through the integration of Payfinia's Instant Payment Exchange IPX platform capabilities and the Metallicus MetalPay API-based framework. And so remember what Frank Mazda said, that credit unions can use WebAuth technology and MetalPay technology right now in this very moment in time. We got BitGo partnering with Investify where they can now offer digital assets to over 50 different states. BitGo CEO or COO, excuse me, mentioning that we're about to exit out of this test environment. And then we have this organization here re-highlighting their partnership with Metallicus. So this is that announcement from Payfinia, June 16th, 2026, so this year. And if we go back to their LinkedIn profile, Keith Riddle, from a year ago, he did highlight how they're excited to announce unique payments partnership with Payfinia and Metallicus. And then this, in more recent times, was from February 2025. And right here, it says, we are thrilled to be at the forefront of the unique partnerships as Payfinia's secure instant payments framework creates a bridge between standard monetary systems and the emerging digital asset framework managed by Metallicus, enabling use cases that are fully embedded within existing digital experiences, simplifying payments orchestration, leveraging a suite of layered fraud controls and unified real-time send and receive capabilities, said Keith Riddle, the general manager at Payfinia. We look forward to collaborating with the Banking Innovation Program participants to accelerate additional use cases that would be enabled through the integration of Payfinia's instant payment exchange and the capabilities and the Metallicus MetalPay API-based framework. And then we fast forward to June, and they're talking about how all of this is happening in real time. The Circuit Accelerator program introduces fintech innovators to a network of more than 80 different credit unions representing more than 51 million members and $382 billion in assets. So again, looking at these numbers, 382 billion, just imagine if, I don't know, 20 billion or 50 billion of these dollars flow onto the Metallicus ecosystem or the XPR network, right? And so I'm just here in an attempt to show you guys that we're still seeing infrastructure built out in real time. Metallicus at the forefront of this. Now, in my personal opinion, is not the time to be afraid of these discounted opportunities. It's the time to take advantage, considering that we're about to enter into not only this new era of finance, but this new era of utility-driven bull market cycle and institutional adoption. All right. So that's all that I had to share with you guys today. Just piecing some things together in terms of some panel discussions from some systemically important organizations and some high-end financial institutions that operate in the crypto ecosystem. With that being said, blessings to you guys and gals.